Hello and welcome to the Weekend Investing Daily Byte of 29th of July. And what a day again today. Nifty almost kissed 25,000, but not yet, didn't cross it, came back down and ended completely flat. However, there was a lot of movement in the market today. So several sectors, several sections of the market were extremely buoyant. Real stocks, for instance, public sector banks, public sector enterprise stocks, running like crazy. Masdoc, RVNL, BEL, several of these stocks really did well. So today's discussion in the second half of the video is on Warren Buffett, how we can try to beat what Warren Buffett has done. Yes, you can do that. I will show you the magic, what you can do to come close to him, and and some of the things that we need to learn from him in terms of trying to get there. First and foremost, please subscribe to the channel. Only 40% people who are watching the videos have subscribed. Please make that number go up. Now, where are the markets headed? Markets are definitely headed higher. We are not stopping at anything. Capital gains tax was put on us. We brushed aside, said, okay, it doesn't matter. We are going up. All kinds of news have been thrown at us since election day. Market is saying, no, I don't. I just want to go up. So market is going up, and 25,000 is that huge round number. You know, it's just like in cricket when you are in the 90s. Sachin or Sunil, every time any great cricketer, if you see the record, most of them, sputter at 90s, becoming very defensive. I think today was such a day. We went to 24,999.75 on Nifty and didn't cross 25,000, and we came down to 24,836. Nothing lost really, but this is usually what happens around round numbers in indices, in stocks, and that is natural because human behavior is getting reflected in the market. See, market is a mirror. Market is a mirror of human, psychology is human behavior, and that what we behave, how we behave, what we do, how we think is actually reflected in prices, and that is exactly what happens here. So Nifty totally flat. Nifty Junior, very nice 3 days up now, closing at very near all-time high, 74,288. Very nice support taken at the previous support and now going up, just looking very strong, 1.2% on that. Mid caps closing at a new all-time high, 0.94% up, 21,400. Small caps also closing at a new all-time high at 1.07%. So if a sort of a flip of what was happening a few days earlier, where mid and small caps were not moving, Nifty was moving. Today, Nifty was flat, mid and small caps were moving. So this relay race between different parts of the market and between different sectors of the market is visible on a daily basis now. If we see the Nifty Bank, there was a huge movement in Nifty Bank. There was a 52,400 on the high, 51,400 on the low. So 1,000 point movement in Bank Nifty, but net only 0.22%. So Bank Nifty is the weak link, so as to say, but still not so bad. We are holding above election day highs. There has been this additional liquidity requirement in banks, which is said to be hurting banks a little bit. But other than that, banks are consolidating. There's a very nice joke going around this index thing, indexation and long-term capital gain thing, where people are saying if you don't want to pay long-term capital gains, buy HDFC Bank. But that's just a joke. So today's heat map: HDFC Bank down minus 0.81%. Titan, Bharti, ITC, Kotak, Axis all losing some ground. You had some good gains in Ultrasemco, which is taking a big stake in India Cements. Now, if you see India Cements stock, it barely moved 0.5% on such a big news that Ultrasemco is taking over some, I think, 20-30% stake in the company. Everything gets discounted more or less most of the times, and that is why the BBC principle, Bhav Bhagwan Che, always works in the market. L&T up 2.5%, Mahindra up 1.5%. You had Bajaj Finserv go up after many days at 1.9%. Reliance did well at 0.7%, but other than that, there were no real big gainers except Divi's Lab also perhaps. So the larger caps in the market did not move much, whereas mid and small caps had a decent run. Nifty Next 50 had a lot of stocks moving. You can see the big green blobs are on DLF 4.8% after a long time. DLF has moved big. It came out with fantastic numbers. They have a fantastic pipeline of real estate launches in the next 1 year. It seems like DLF can go places. IRFC along with RVNL, Railtel, all were doing well. In fact, some of these stocks hit 10% circuit also. I mean, that is the kind of buying that they're witnessing. PNB, PFC, REC, HAL, BEL, IOC, all these public sector units also did extremely well. Siemens and ABB joining the rally. Trent, Zydus Lab, SRF also doing very well. Not very big losers in Nifty Next 50 except LIC, some losses there. SBI Life, Ambuja Cement, Shree Cement, but nothing much going down as such. In terms of sectoral trends, you can see 2.3% on PSU banks. So just standing out as a sector today. Real estate standing out 1.4%. With this move, they've almost uh, wiped out the losses for the last 1 month. The 1 month now for both these sectors is now nearly zero. Public sector enterprise stocks also pitching in with 1.2%. Rest were muted, about 0.5% or less. Consumption, FMCG, and IT were taking a break today. So not much to say there, but just very focused relay race happening with today's winner being PSU banks and real estate stocks. PSU banks, you can see the chart. We've had some sort of a resistance at this point. So this entire rally from last August, you can see 4,000 onwards, it went to nearly 7,400 and it has been resting here and unable to break out really. I mean, this election day was a blip and we are still below election day high. So PSU banks versus other sectors are really lagging, but then, it may just be forming a base here and go off uh, at some other point of time. In terms of stocks, you saw REITs go up almost 14%. So this is also creating some sort of a flag here. Has been going up from 200 rupees in the last 1.5 years. It is now at 759. Again, I'll repeatedly say this. People who are watching, price earnings ratio or those kind of historical metrics uh, will not be able to play this market because this is a very different market. Uh, there is so much liquidity in the world today, and so much liquidity has got created since COVID that the entire, asset base has been lifted up. It is just like, you have boats in a pond and then you double the water in the pond. Obviously, everything will rise. So that's what's happening. So historical levels probably, there'll be newer benchmarks made because just in last 30 years, you can see 25, 30 years back, whenever Nifty used to go above 15 times, 18 times, it used to be hugely expensive, and you could buy it at 12 times at most periods. Then there came a phase where markets never went to 12, it never went below 15, 16, but 25 was the higher limit. Now it seems that there's another phase shift that is happening, that any time if it comes below 20, it will become a buy, and every time it goes near 30, people will say it is expensive. So this is the kind of phase shift that is happening because of the rising quantum of money floating around in the world. We have to, cannot forget that fact, that money is not finite. If money was finite, then all these games will be very different. But money seems to be on an unlimited printing basis. Coming to Mr. Warren Buffett. So Warren Buffett is, of course, the master of compounding. He has compounded his wealth over 80 years or somewhere near that. He started at the age of 13, I believe, and for the last 80 years, he has been compounding his money. He has made more than 99% of his wealth post the age of 60, I believe. So, regardless of where your portfolio is, whether it is 1 lakh, 10 lakhs, 1 crore, 10 crore, 100 crore, 1,000 crores, whatever may be that amount, the same metric, that 99% of your wealth can be made after your age of 60 if you are living as long as Mr. Buffett is possible. So that math cannot change. That math remains the same for Mr. Buffett as well as for me as well as for you. That we can, if we match his returns, which are not really out of the world, but he's consistent, he's dedicated, uh, he's got that compounding machine going where he knows that the longer he runs at this compounding, the exponential curve keeps going up, 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 up. The same maths will apply to our portfolios also. provided we don't make stupid mistakes, which he doesn't do normally. Anyhow, so now let's compare, just for some shock uh, data basis, what has his Berkshire Hathaway stock done in the last 20 years. That will give you some idea as to the CAGR that we talk about in Warren's portfolio is not something that is unachievable. So Warren's stock, Berkshire Hathaway, the CAGR for last 20 years, I've taken last 20 years because 20 years is a decent enough time to compare anything, is 10.59%. Okay, so this is the white line that you can see. This is the Berkshire Hathaway stock, and it has done about 656% in the last 20 years. About 10.59% is the CAGR. S&P 500, the broader American index, in the same time period, for this time period, has done 8.29%. He has beaten the underlying market by a decent margin. Nifty in US dollar terms, just to make sure that we are comparing apples and apples and not oranges and apples. This is the blue line. In the same time period has done 11.25%. So even if you did nearly index returns in dollar terms, you are coming close to where Mr. Buffett is. Okay. So from a point of view of returns, he's not doing something which is totally, out of the realm of our reach. He's somewhere near where everybody else is. But what his uh, approach towards compounding is that he's not going to take that money out and spend it. He's happy with his, one Coke and a burger a day. He lives in the same house, drives the same type of car. He has no use of that money. He's happy to see that number grow. And he's compounding at 60, where he was, and he's now 93 or wherever he is. He's grown 60 times since then. So the same can happen with you and me as well. Also want to compare that with a selection of stocks. We compared his returns in US dollar terms to Nifty. But what if we had a way of selecting stocks where we are able to pick, stock portfolios which do better than Nifty, for instance, and a lot of people do that. So in this chart, you can see in last 20 years, while Berkshire Hathaway in dollar terms is up 656%, some Indian stocks like Infosys in dollar terms is up 1500%, ITC in dollar terms is up 1900%, HDFC Bank is up 2600%, Asian Paints is up 6300%, Page Industries is up 9000%, and Bajaj Finance is up 58,000%. So a combination of some of these stocks or other stocks, you certainly can beat Nifty in dollar terms and certainly can beat Berkshire Hathaway also in dollar terms. So that part is taken care of. The returns is not where you have to hit a six. It is the longevity, the staying in the market, the time in the market, the not getting afraid when markets are down, to have the right behavior, to have the right psychology. That is where the crux of the matter is. That there is only one takeaway from all these comparisons, that we can outperform his returns. That is not such a big deal. But his net worth curve, after this, you can see this, after the age of 60, he's gone from 4 billion to 109 billion, or maybe that 60 times was above age of 52, if not 60. I was probably mistaken. So anyhow, but that hockey curve can come in for each one of us. It does not require such a big deal of return. So don't chase, returns that I need to make 30%, 40%, or I need to trade with leverage to make that. Even with normal returns, your curve can really go up, but of course you will need to give it more time. So time in the market trumps outperformance by a wide margin, and you can match Mr. Buffett's 80-year compounding with this kind of an approach. Of course, maybe you have been in the market for 5 years, 10 years. I've been for 28 years, but he's been there for 80 years. If we can get to his age with normal compounding, maybe just beat the market by a bit, you will be there as well. Let me know your thoughts on this. This is very, very eye-opening for a lot of folks. and I want to see your comments on this, and we'll discuss this. Discuss it there. Do share this video with your friends and family, and I'll see you in the next one. Thanks. Bye.